What's up, guys? Welcome back to DCA. So here we are, we're now below $16,000. So this is what I've been talking about the entire year. If you go back to December, you can watch videos that I was making talking about the fact that we as investors in this market need to have an appreciation for the fact that the economic circumstances, if they become more dire than they were in 2021, if the inflation continues to run, if the Fed is true to their word in that they expect to continue to raise rates throughout 2022, I made videos telling you guys that we were in for a ride. And, I've got blowback from people all through. Go back to any video I've made, any single video. There's plenty of positive comments, but in every single video, I get multiple comments telling me that either A, you're an idiot, you don't know what's going on, you don't understand, because some clown told me that the Fed had to pivot because the U.S. government can't service their debt if we raise the interest rates past 3.25%. These people have no clue what the hell they're talking about, and the vast majority of retail investors in the crypto space are listening to these idiots. And at the end of the day, these guys are just as bad for the crypto space as is someone like FTX. So FTX gets the institutional market wrecked. The shit tubers at the top of this space are getting the retail market wrecked because they have no clue what they're talking about. And they come on every single day, no matter how far down we go, and they say, we're going to pivot, we're going to pivot, we're going to pivot. If you don't know that there's inherent risk and that these institutions bring about risk in the market, especially the more inexperienced institutions who are, pushing extreme amounts of leverage onto this space, and if they go down, they're bringing everyone else down with them. And that's exactly what's happened. So when Luna went, and then we saw Three Arrows Capital, then we saw Celsius, amongst all the other smaller institutions that have gone, and now ultimately FTX, and now FTX is threatening the very core of the crypto space. So there's talk about what could happen with Grayscale. People are worried about what's going on with Coinbase. You have Genesis, their lending wing, going down, or, they're trying to secure more capital now. They're trying to recapitalize, aka they're wrecked just like everyone else. So, these guys saying that this shit is black swan, no, it's not. These guys are idiots. They're absolute idiots. And at the end of the day, we just have to call it what it is now, because we're below 16K. And this is what I said to you guys. You can go back and watch back in December, me making videos talking about, you need to be careful if you're holding altcoins. You have to be careful if you're holding altcoins. This is December. So at that point, it's a little bit apparent that, yeah, altcoins might be getting wrecked. Solana's at 170, where it was just, not too long ago trading at 270. And I said, that's nothing. The market could absolutely collapse on you. And this $170 Solana, you would be thanking your lucky stars to get out at $170. Because what's coming if we head into a bear market is an absolute collapse of these altcoins. And furthermore, what's coming if we head into a macro bear market is an absolute total collapse like you've never seen before. And what does that mean? Why do I say that? Well, let's look at the NASDAQ since 2010. It's a straight line up. So these idiots who know nothing about macro, they truly know nothing about macro. They don't understand why the bond market matters. They don't understand how risk assets are going to operate around the DXY, or they may have the very rudimentary understanding that as the DXY goes up, maybe we see risk assets fall down in price. But they don't understand the actual structural integrity that the bond market sets and that the interest rate sets. And when these things start to act like they have over the last, 9 months, really, as we've seen inflation run, we've seen the Fed come out and say, we are not going to pull back on rates. They've said this. They've said it over and over and over again. And these idiots come in and tell you, oh, they can't raise the rates above 3.5%. It's just impossible. It would collapse the American government. Every single week they come out and say the Fed's going to pivot. The Fed's going to pivot. The Fed's going to pivot. They say it with such certainty and confidence, and they have such a large viewer base that they just contribute to this never-ending cycle where these people listen to them and believe them. It's like they just keep coming back for more. And quite frankly, I can't fathom, watching someone give the absolute wrong answer, the antithesis of whatever's happening, just so consistently, and then to continue to watch that person. But that's just how it is. That's how this space is. Fine. If you back in whatever May didn't understand the potential risk of Luna, that's fine. But when Luna collapsed, if you still don't understand the risk that this presents to all of the institutions in the crypto market, and the way that these things interact, and the fact that these institutions are using Bitcoin and Ethereum as collateral, and as the value of that collateral is collapsing, what the hell is going to happen if all of your company's net value is tied up, and it's tied up in these assets that are absolutely crumbling? What's going to happen, when you have to pay those debts that you have, when you've taken on all these liabilities, and the collateral that you have has now, what happens to you if you trade on margin and the value of your collateral collapses? What happens? You get your ass liquidated. And for an institution, what's that mean? That means they go bankrupt. And that's exactly what we're seeing. And yet these guys still have the audacity and the nerve to come out and say that, the market's going to turn around. It's we're right around the corner. The market can never go below 30K. It sure as hell can never go below 20K. That's impossible. It can never go below 20K again. Right? And then as they're saying this, then they'll say something like, if it goes below 20K, that would be a complete structural collapse of the crypto market, and, Bitcoin's dead. And it happens, and then they change their tune, the day after it happens. Because, why did they change their tune? Well, they can't run their show anymore if they just told you that going below 20K is the structural collapse of Bitcoin. So what do? They pretend like they never said it, and they just make up some new shit because it's they're basically running a fan fiction channel where they say whatever they think people want to hear, and that is what people want to hear. They want to hear, the price is going to turn around. It's going to turn around. It's going to turn around. And that's because they've been listening to whatever clown is telling them that it's going to turn around, been telling them that it's going to turn around ever since 50K. 50K. Oh, I'm sniping Bitcoin. I'm sniping Solana at $200. It's like a little club up at the top of the YouTube space where, they all do their shows together. And so, you can't really say anything, and no one else says anything, because if you want to play in the game at the top, you have to be pals with these guys, because you have to go on their channel, and, you have to do co-streams together. So when someone like me comes out and says, calls them out on their bullshit, then it's, people can't believe, oh, how dare you say that about such and such? Well, such and such has lost you, half of your net worth. How's that feel? Right? I've been telling you ever since December to get the hell out of the market, to get, be careful with your altcoins. You really need to consider what you want to do with your altcoins, because if the market enters into this bear market, $160 is going to look amazing. And if, like I said, if we head into a macro bear market, the crypto space has never seen that before. So it's going to be an implosion like you've never witnessed, like you can't even imagine. That long-winded story leads me to this. And this is another thing I talked about. I said that if we head into a true, a bear market, a macro bear market, or a recession, that so what we're looking at here is the logarithmic regression curve for Bitcoin, right? This is a curve that we developed, and, We've drawn out these bands, these upper and lower bands, and we said that, well, what would be an invalidating factor for this? And how could we potentially see these log regression curves break down? And what we said was that macro bear market, if that actually happened, that's how you see this break down. Okay. And so where are we right now? Well, we've finally went below this lowest band. Now, we've done this before. We've actually been down to this lowest band before, specifically right here at the COVID event. But we've never had a close even close to this lower band. And you'll notice that when we broke down right here, when the FTX event happened, and let me reiterate, that is not a black swan event. That is a very, I'm not going to say like, oh, I knew FTX was going to collapse, but that's a very predictable event. And the reason for that is, and when I say predictable, I mean, it's predictable that there's continued risk in the market. And that's because these companies use this as collateral. And when their collateral drops in value, they cannot service their liabilities, right? And so what happens if you can't service your liabilities? Well, you go bankrupt. And so, even if FTX didn't collapse, Alameda still would have collapsed. And, if things were on the up and up, they owned a lot of assets themselves. So, this would have been a big event regardless of whether FTX went under. Obviously, FTX going under with it potentiates the issue. But this is where we're at. We've now dropped below this lowest band of the risk curve. And, I don't think like I said, these models, all of these models that we've made, all of these price models, and even the DCA risk model to a degree, even though it does account for some macroeconomic statistics and data, these models have all been made in a macro bull market, a decade-long, over a decade-long macro bull market. And so if we are in a situation where, and I don't know exactly how bad it's going to get, but I've been telling you the whole damn time that I have a bearish bias. My bias, I have never once, not one single time in 2022 have I said that I have a bullish bias set now. I have said that I believe that there is continued downside pressure in this market. I may say things like, this is a bullish sign, but there's always that, but my bias remains bearish because of X, Y, and Z. And they've been the same X, Y, and Z all year. It's not rocket science. There's nothing magical about what I'm doing. I'm looking at literally the most basic macroeconomic indicators. And, many people might not know this, but I was an economics major. You don't need to be an economics major. All you need is Wikipedia. Go look up what the hell the bond market does. Go look up interest rates. As interest rates start to go up, your debts increase. And if your debts increase, what are you going to do? You're going to get out of things that you've been in profit in now for 10 years, and you're going to raise capital in order to service those debts. So this shit is not like truly for these people to be just constantly coming out and saying that the market's going to turn around. It just shows either a complete lack of knowledge about how this space works, or it's just, straight up them being deceptive, them not giving a shit about their viewers and only caring about lining their own pockets with their viewers' money, because most of them sell some type of service or something. So, I know this one's harsh and whatever, but I just wanted to point this out because go watch every video that I've made about this log regression curve for Bitcoin. And we've talked about the invalidating factors. And we've said, well, if X, Y, and Z happens, if the macro bear market does come to fruition, watch out, because this may not be the bottom of the curve. Now, ultimately, like anything, and this is why I consider myself to be successful in this space. It's because I have I've established a set of principles by which I'm approaching this market, but I'm always willing to accept that my thesis is wrong. And some people that I respect, actually, they'll come and they'll say, well, no, I'm certain that it's that we're at the bottom. I'm certain that we're at the bottom here at 18K or whatever, 19K. And they come up with very valid reasons why they believe that. People that say that kind of thing typically tend to be technical analysts, and so they have very compelling arguments of why they're right. But they're so certain that they're right. They're so certain that they're right that they can't even, bend an inch in the direction saying that, potentially they're wrong. And, well, they were wrong. And so, that is how you can end up getting wrecked as an investor, because you become so entrenched in your position and you can really overexpose yourself in those circumstances. Whereas, even though I'm extremely bearish and I've been extremely bearish, I've continued to dollar cost average. And that's because I do believe in the long term, and there's an argument to be made that I'm wrong about this, but I do believe in the long term that Bitcoin will recover. And I don't even know if it will ever set all-time highs again. I believe it will, but there's a route to becoming extremely profitable in Bitcoin, even if it never went to an all-time high again. And so my approach to investing is that, I build an argument about why I believe the market is going to do what it's going to do. And then, I try to come up with counter arguments for that as to why I could be wrong about my thesis. And then ultimately, I try and approach the market based around my thesis, but I'm willing to be wrong. I'm willing to say that, okay, well, I believed in XYZ and that's not how it played out. A, B, and C happened instead. And because of that, well, now I need to readjust my stance, realize that I wasn't right, and, take a different approach. And that's something that people have just refused to do all the way down. They've ridden Bitcoin, ridden it into the ground, all the way from people sniping it at 50K all the way down to where we're at 15K now, 15.7. And ultimately, I've made plenty of videos showing where the support and resistance levels are. And, back when I made a video, we were literally at 50K or 40K or whatever we were at and saying 20K. And people were like, hell no, that cannot happen. That's crazy. You're crazy. That cannot happen. Bitcoin could never go that low again. The fundamentals are too strong. And, when we're sitting at 50K or whatever, I can't disagree with you per se. I can't say that, 100% I'm right. But we need to accept the fact that at least potentially this can happen. This can happen. We can go down to 20K. Don't think for a second that it can't happen, that it is out of the realm of possibility. And so when I make these videos saying 12K, one of the thumbnails that I made, I think a couple months ago now, maybe 2-3 months ago, said 6K. Don't think that it cannot happen. Don't think that 12K or 10K or 6K cannot happen. When you get into the trap of this cannot happen, it's impossible, then I really feel like you're defeated, because it leads you to being blinded to what's going on around you, right? You get tunnel vision, you lose the peripheral sight, and you can't see all the little things going on in the market all around you. You can't see what's going on in the bond market. You can't see what's happening with, these institutions collapsing all around you. You can't see the potential risk that grayscale presents to this market. You can't see, well, what's going on with Coinbase? Maybe we should investigate that just to make sure everything's on the up and up, right? Everything's on the up and up, probably for Coinbase at 15.7. Well, is everything fine for Coinbase at 10K? What about at 6K? What the hell happens to Sailor and MicroStrategy? Are they okay at 10K? What about at 3K? Right? So you have to remember that this system is almost eating itself alive right now, because as we fall down in price lower and lower, these people's collateral becomes worth less and less. And as your collateral becomes worth less and less, it becomes harder and harder and harder to stay solvent. And so, ultimately, I don't know where the bottom is going to be. I don't operate like that as an investor. I don't say it's got to be this price, it has to be here, because how many clowns have there been that have said has to be 30K, has to be 20K, has to be whatever, 25K, has to be 40K. What the hell is the point of trying to pick a price? You don't know what the hell's going on. You don't know who's going to either stop the bleed or make the bleed continue further, right? You think some fucking line on a chart is going to stop some mega whale from either dumping or buying in at some certain price? It's not. There's a lot of good that comes from TA, I think, but it's using it in the appropriate situations. So, a lot of this TA that people are doing, that people are doing right now, it's going to break down. It's going to break down because forces that are much bigger than the crypto market are influencing this market right now. When the bond market is showing weakness, let's say, and the Fed is raising interest rates, the crypto market is about that big compared to those spaces and the relative impact that those have. The point I'm making here, guys, is, it's a couple things. A, seriously consider who the hell you're watching and do they know what they're talking about? If you're listening to someone who, has been telling you one thing this entire way down and it's been wrong the entire time, well, at some point they're going to be right, because there will be a turnaround at some point, right? But are you so absolutely wrecked at that point that, if we went down to 5K and you bought in at 50K, you'd have to go up 10x just to get back to even, right? So if you're listening to that person and you're holding onto these ridiculous pipe dreams because some idiot's telling you, X, Y, and Z, and none of it comes true, really consider, why are you listening to that person, right? Because I think that those people are an absolute blight upon the retail market in this space. And I think it's really bad for the crypto market. I think that these, people pushing hopium, I think they've really done a disservice to the retail market. And the second thing is, some of these invalidations that we talked about, this market cycle, it's taught me one thing for sure. And that's that if nothing else, I'm good at reading a bear market, because I feel like I've had a strong pulse of what's going on this entire bear market. And I've had at least I've had a strong pulse on what's going on as it relates to the crypto market. And, we've talked about these invalidating factors, and here we go. We're now below this lower band of the log regression curve. And it would not surprise me whatsoever if we see a further breakdown. And that's what I said. I said that a lot of these models are going to need a reconsideration if we head into this macroeconomic bear market, because none of this stuff, none of the data we've collected, it's never been exposed to a real bear market. So we're in uncharted territory at this point. So that's going to be it for this one, guys. So until next time, as usual, see you.